got the management of Tech Mahindra here to talk a little bit more about the quarterly performance. Joining in on the show, we've got Mohit, who is the MD and CEO of Designate, and Rohit Anand, the CFO at Tech Mahindra, joining in on the show to give us a sense as to what the outlook is for business. That's Mohit Joshi as well joining in. Good to have you both on board. Thanks so much for taking time out. Rohit, I'm going to start off with you. The last 2 quarters have been challenging without a doubt, but what's the outlook for the next 2? Is there going to be recovery on the cards in the second half or only by FY25?
From a second half perspective, we see, while the deal wins, you see this quarter has come back, right, from last quarter. So there's a positive improvement. The pipeline's positive. But for that to convert into revenue, I think will take some time. So for now, I think the second half looks, from a demand perspective, will continue to be challenging versus seeing a rebound. From a margin perspective, as you know, we look at defining our core in terms of what we want to focus on in terms of geography, service line, products, areas of focus. We'll continue that exercise that we've done this quarter into the next quarter as well before we get to a baseline view towards Q4. So I think that's the way to look at both revenue and margins.
Okay, so Rohit, I just want to get in a follow-up. Does that infer that then revenue will likely change, will likely continue to the declining trend then for the next 2 quarters and margins aren't yet at the bottom?
No, so let me clarify. Maybe I'll take the margins first. So margins, the bankruptcy impact was last quarter. That was the exceptional item that we shared. This quarter, the impact is 140 basis point is operational drop basis, utilization reduction and revenue drops that we've seen based on the demand environment. 260 basis point is one-time exceptional item, which I was addressing to as, what we've terminated, closed and deprioritized as a business, more around certain regions that are not fitting as a long-term strategy, right? So that's a part of that. We'll continue to do that exercise towards Q3. So that's kind of on the margin. In terms of revenue, as I mentioned, the second half right now, there's less likelihood to see a rebound given how we're seeing the deal conversions to revenue in terms of lead time. It's more, and we don't really give a guidance, so I won't give you a specific number, but it's more attuned towards a flat to a slightly downward trend right now.
Mohit, explain to us the rationale for restructuring, the cost and the revenue synergies. How do you see they would kick in?
When we did the reorganization, we wanted to build a more streamlined organization. We wanted to get some of the benefits, so from a delivery perspective, there were really 3 objectives that we were looking to drive, right? One is Tech Mahindra is known for service resilience, for the quality of the work that we do for our clients, and I absolutely wanted that to stay rock solid. So that was one clear intention or one clear sort of design element behind the new organization structure. We also wanted to continue our tradition of service line innovation, so to drive a lot more service line innovation within TechM. And finally, clearly we have to have an eye on our margins and be able to drive the margins, and I feel that this new organization structure from a delivery perspective is able to give us that resilience, increase in service line innovation and improvement in margins. From a market perspective, wanted to consolidate the sometimes overlapping sales organizations that we had from a telecom and a non-telecom business perspective. So really saw benefit to combining those two in Europe and in Asia Pacific and Japan. And in the US, again, we had a mix of a geography and industry-based go-to-market, so to consolidate it and to make it, vertical within North America based organization structure. Wanted to build out a clear consolidated marketing organization within TechM. And so I think these are some of the design choices that we made, which I think will help us drive innovation, improve margins and improve growth into the future.
Okay. So Mohit, what's been your assessment of demand in various verticals and the budgets for CY24 basis your client conversations?
So look, I think it's hard to say, and I think the picture is more nuanced based on the industries and based on the geographies. So first of all, I think the telecom vertical or telecommunications globally has been the most impacted sector, right? And this is true not just for us, but for all of our peer group. But some other sectors where we have strengths like manufacturing or the emerging strength that we have in healthcare, these sectors have been more resilient from a spend perspective, and I suspect that that will continue. From a service line perspective, again, cloud remains an enormous driver of growth, and we've seen this in Microsoft results just yesterday. I think generative AI gives another significant boost to the industry. So you might see, sort of quarterly or even half-yearly sort of turbulence or ups and downs, but clearly in the long run, right, the future of enterprise software and providers like us is extremely bright. I'm very confident that given our deep and historic strengths in telecom and manufacturing and the emerging strengths that we have in other sectors like financial services, like healthcare, the deep presence we have in our North American and European markets, but also uniquely the presence that we have in Australia and Japan and Asia Pacific should make our business more resilient into the future.
All right, Rohit, lastly, the deal wins have been very strong this quarter, but going forward, how are you looking at the deal pipeline and the funnel shaping up?
Yeah, so look, I think on large deals, I do believe that again, we have a strong engine that we're going to work to strengthen. I feel the new organization structure and our sort of vertical focus within the Americas and the reorganized structure that we've built in Europe and APJ, and the fact that we are now going to be organized vertically from a delivery perspective, should mean that our track record on large deals should continue to stay strong. Again, large deals, as you know, there's a lot of volatility quarter on quarter, but I am very very confident, just given the fact that our pipeline has stayed strong through the cycle.